We'll go through the Q2 earnings of Nvidia today. Let's look at the share price. I think Friday dropped a fair bit, right? Down by 2.4%. Right now, the share price is 174. If we look at year to date, it's still up about 26%. If we look at this is from macro trends. So definitely Nvidia is not the top performing stocks, even among the big cap, right? So this is filtered for those with market cap above 250 billions. Nvidia is one of the top one, but still not in the top three. So top three is definitely Palantir, so up by 107%. GE Aerospace up by 65% year to date. And of course, Alibaba, yes, Chicken. Alibaba is up 60%. So Nvidia is still shown in the first page, but definitely not the top performing stocks. Even AMD, 34% is higher than Nvidia. So I think Nvidia together with Broadcom, they are quite similar, about close to 30%. So that's relative performance. Let's look into the earnings release. So if you look at this is total revenue chart, quarterly chart. So since around July 2023, right, that's the big jump after ChatGPT came out. So all this server business, data center business is ramping up. You can see that every quarter is gone up by about similar amount. I think probably about 4 billion increase every quarter. So that's definitely impressive. If we look at the current quarter, that was up by 55.6%. So to me, you ask me this kind of results good or not, my answer is yes, super good. But I don't want to say surprising or unsurprisingly, the share price dropped after the earnings release. So there's some little things that investors are concerning or didn't meet their expectations. But for me, as a long-term investor, I'm very pleased with the results. But if you plot the growth rate, this is year-over-year growth rate, right? And look at the current growth rate. Currently, it's about 56%. So definitely down as compared to the previous 3 or 4 or 5 quarters, right? I think this is expected. So slowdown in growth rate is definitely expected as the base become larger, right? But at 56%, right, to me, is still a very decent number given that now revenue base is a lot larger. So you look at this chart, right? Last time when they were printing like, let's say 5 to 10 billions per quarter, right? It's a small base. You can go up by 100% in one quarter. But right now it's already at 47 billion in just one quarter, right? It's very, very large number. So I definitely don't expect this percentage will stay like above 50%. We should definitely expect some slowdown in percentage terms. But in absolute terms, it can still continue to ramp up, right? Because the demand for the chips and data centers still remain high. So that's the revenue growth rate. And then if we look at the breakdown of this revenue growth, right, you can see that the story is still on data center. Because you look at those gaming, 4.3 billions, professional visualization, 600 millions. The rest is like not even 1 billion, right? So you can definitely just skip those, just focus on the data center. And now data center, they break down to the compute and networking. And networking side, I think you can see here, right, year-over-year growth rate is 98%. That's very impressive. And for the compute one, it's still up 50%, which is definitely decent. It's just that if you just look at quarter to quarter, it is down by 1%. I think all these things, right, there's really nothing much concerning here because definitely there's some cyclicality or we call it lumpy, meaning that the ramp up is not like 100% very smooth one, right? Sometimes there's, depending on how they book in the revenues. So there's some reason that all these numbers can fluctuate a bit. So it's not like a straight line up, right? So that's definitely fine. But if you look at the explanation given by the management, right, they say that focus on this data center compute revenue was 33.8 billions, right? Up 50% from a year ago. Sequentially, compute revenue declined 1%, driven by the 4 billion reduction in H20 sales. So I think, let's say if we're talking about H20 sales to Chinese market, right? If all these sales is not banned and then they just continue to ramp up, right? Definitely we should expect the compute also go up a couple of billions, right? But now because of all this restriction, they can't sell it. So there's some impact to that now. But I think in terms of the sales to China, I believe that they are doing well here in terms of like convincing Trump administrations to continue to sell to China, right? So I think there's potential upside from this segment, which is sales to China. So all these things, I think you are trying to nitpick here, like saying that, oh, everything is good, but there's some a little bit of concerning things here and there. But overall, I would say that definitely still impressive result. The only thing that we can say is that probably the investor is expecting too much from this earnings. That's why it fails to impress high expectations. That's why we didn't see a breakup from here, right? But overall, the results still quite good here. So let's further look into the numbers. So operating income now is already at $28 billion. Definitely record high operating income. And then if you look at diluted net income, also similar similar, 26.5 billion, also record high, right? So that's why I say the numbers looks super good here. So this is just to show that, okay, Nvidia definitely the largest company in terms of market cap is actually at 4.247 trillion market cap. So it's like 500 billions more than Microsoft and the rest, right? Definitely the top company. That's why, there's joke that if Nvidia fail to outperform, right, then the entire bucket would definitely be affected. That's definitely true because of the size, right? And there's a lot of expectation built into Nvidia results. So, but if you look at this is the net income figures. So you look at Nvidia numbers, right? If you just look at, I believe they are using past 12 months here. That's why you're looking at 89 billions of net income number in the past 12 months. But if you just look at the diluted net income in the previous, the current quarters, right? 26 billions multiplied by 4, that's more than 100 billions of net income already. So in terms of net income, right, that is still not the largest in the list here, but it's already top 5 companies in terms of the net income. I believe when I invested in Nvidia, right, when you rank the companies by net income, right, they are not even in, let's say, like top 50, or sometimes if you look at revenue, it's not even in the top 100 companies, right? Right now, if you look at how much they sell in terms of the data center demands, right, they already climbed to like one of the top companies in terms of net incomes. So I think definitely very impressive here in terms of the numbers. So this is just to show the progress. And then if we focus on the margin, of course, their margins is consistently quite high. Last quarter, there's some, write down because they are restricted, they are banned from selling to China, right? So there's a bit of a write down. So you can skip last quarter numbers. Now back to normal already. Gross margin is about 72%, EBIT margin 60%, net income margin 56%. So definitely they are able to maintain this because of the demand, because of the mode in terms of their pricing. They don't have to lower their price to grab market share, right? Because they really dominate all these data centers built out, right? So I think this is definitely just to show that there's continue to be high demand in terms of their products. That's why they're able to maintain this kind of net income margins. So if you look at free cash flow, now 13 billions, there's a bit of drop here, but I think this is nothing concerning. If you look at the details of their financial statements, right, definitely you can see that, inventory start to build up a lot more as compared to previous quarter. Free cash flow have some impact there, but I think 13 billions is still quite a very nice numbers, right? This is, we're talking about one quarter, you multiply by 4, that's 50 plus billions of free cash flow, right? So I think numbers wise, I'm quite pleased. Now looking at valuations, right now valuations is about 31x forward PE. 31x forward PE, I would just say it's considered fair. It's definitely not like last time when it was traded at above 50x forward PE, right? But it's also not as cheap as, let's say, like below 25. I would say that as long as the growth rate is able to sustain at this kind of level, right, 31x PE is not that high because we're talking about, PEG of less than 1, right? Because remember, growth rate currently is still at 56%, still quite high. But I think because although it's 31x, but investors are not willing to pay 1 PEG, right? It's also because every quarter, investors are asking like, can they sustain at this kind of growth rate, right? Because from 56% growth rate, suddenly it can drop to 20%, right? Who knows, right? And some of the companies that we have observed, right, definitely from positive growth rate suddenly just drop to 0, no growth at all, right? So people are still questioning like this kind of growth rate, how long can they sustain? But I think it's already like how many, like 6, 8 or quick 8 quarters already. They continue to surprise us with how long they can sustain this growth rate, right? So 21x PE, I would say is quite fair at this moment. If you look at the earning per share forward 5-year growth rate, right, this is actually they compile, they ask all these analysts, right, like in terms of the next 5 years, how much do you expect their earning per share can grow, right? The number is that they say 34%. So 34% of EPS growth for 5 years, we are talking about the earnings still can go up a lot more compared to today's level, right? So definitely some expectation is built into their valuations. So this round, I haven't done a detailed DCF valuations. I don't do this very often. For me, every quarter, I just observe that whether they are still growing, whether in terms of their margin, they are able to sustain. So far, all these numbers still looks good. And in terms of the expectations, still, I would say, broadly unchanged as compared to 1 or 2 years ago. You can see that it's around 35%, right? So that is still quite stable. In terms of the market cap, of course, if you look at the numbers now, I think when they were trading at below 1 billion, people didn't expect that it can grow so much, right? Now, after a couple of years, it's already at 4.2 trillion market cap. It's the king of the stocks. This one I just purposely want to show because they just announced a 60 billion share buyback, right? So that 60 billion they didn't share, it will be conducted within how many quarters they didn't say. But you can see here that all this free cash flow that they have generated, right, they are not, parking it in cash, right? They continue to return all this money to their shareholder in the form of share buyback. So you can see that in the past few quarters, they have been reducing their outstanding shares for quite a fair bit. In terms of percentage, it's really nothing here, but just to show you that their share outstanding has been reducing. So I think definitely they are returning monies to their shareholders. A good sign here. I would say that if you follow their Q&A in the past 2 years, right, there's really nothing new here. I would say if you follow the GTC, there's a lot more like, let's say, product offerings, product announcement, right? But from Q&A here, I think it's more like just reaffirm the investors, the stuff that have been communicated in the past. So I won't go a lot more into the details. I would say that, let's say, the first questions they asked about the China, right? So I think the takeaway here is that they haven't been embedding these sales to China in their outlook. But let's say if they are managed to sell to China, so that will be a upside surprise here, right? But still unsure here. But let's say even in the coming quarters, they are not able to deliver or sell to China. I will say that in the next 1 or 2 quarters, they should be able to do it. So there's good communications and good alignment between Nvidia and also US government. So I think no problem here. And then the other thing is that they start to talk about like what is the size of the market by the end of the quarters. We are talking about like 5 years outlook, right? So I think Nvidia management also mentioned that they are talking about this is a typo here, this is not billions, 3 to 4 trillions of capex spend, total capex spend in terms of data center, in terms of all these IT related stuff, right? And we all know that Nvidia continues to take quite a sizable shares out of this number here. So Jensen also mentioned, right, in the past 2 years, the capex of the top hyperscalers is already doubled now to 600 billions. He expected that this will continue to go up. So if the total capex is 3 to 4 trillions, I don't think it is that hard for Nvidia to carve up like a sizable revenue shares out of this total TAM, right? So I think it's very hard to say that, okay, what does it mean when you translate this to growth rate, right? Some people, they are very bullish. They might say that, oh, they can grow at, let's say, 50% for don't know how many years, 3 to 5 years. So for me, I don't think that is really the key things, because I don't think all this growth rate will go up like a smooth line, right? Definitely not the case, because as long as the top hyperscalers, they try to, like, let's say, slow down in terms of their capex, then you see that the revenue growth will go down in certain years, right? So they won't go up in a straight line for sure. So I expect some volatility when it comes to this kind of 5 years horizon. But the important thing is that as long as this TAM is going to be a lot larger 5 years from now, 10 years from now, right? So we should be able to expect that in terms of the revenue, there's still room for Nvidia to carve out the shares and able to sell a lot more as compared to today's today's number. We are talking about close to 50 billions, right? So maybe they can hit a lot. 50 billions, by the way, that's one quarters, right? It's actually 47, right? 47 billions for 1 quarters, right? So let's say we talk about like 1 year is about 200 billions. So I'm thinking about, like, let's say 5 years from now, 10 years from now, instead of like 200 billions, right? They might be able to hit, let's say, like 500 billions, 700 billions, this kind of like big numbers, right? As long as the TAM is big enough, the capex TAM. So that's why I would say that for those long-term investor, if you invest in this company and willing to wait 3 years, 5 years, and able to tolerate the kind of volatility that's coming, right? So we are talking about a much bigger companies as compared to today, as long as the TAM is able to grow. So basically, that's the one that they are talking about. So I think that's also quite interesting. I won't go into all these details because if you follow this company, there's really nothing much to be concerning. As per usual, Jensen is talking about the products, the data center, the chip that they sell is still the best performing one. And then if you are having a best performing chip, right, then for their buyers, they are able to churn out a lot more revenues because of the number of tokens that they're able to generate, right? Some more, one key thing is that when you talk about data center, they are always limited by the electricity or power, right? So if your power is limited, then you want to maximize your tokens, right? Then you want to buy the best chip, right? Basically, that's the arguments that's given by Jensen. That's why when talk about Blackwell, and then maybe 1 year from now, we are talking about Rubins, all these chips, right, is so much better as compared to the previous generation, right? So there's no reasons that customers will stop buying, at least for now. But all these things, I would say that at least for 1 year or so, I'm not concerning about the sales. The question is always that, wow, your product can go up so much within 1 year, right? Would there be a point where your products kind of like max up already in terms of the innovation that you can bring out? Then from one generation to another generations, maybe it is not like 3x better, but 30% better. Then maybe in terms of the growth rate, right, will slow down in the future. Who knows, right? But for now, I would say that we can see up to, let's say, 1 or 2 years ahead, right? The product that they're going to come up with is still super impressive as compared to their own best product. So that's why I would say that in terms of their product, I'm still very confident they are able to pull all this off and able to sell to their customers. I think that's really the most important thing from a long-term investor perspective, right? So that's the good thing. So, okay, before I end the presentation, right, I just want to, give some, some comment in terms of viewers who view this kind of video, you watching this video, right? So, because sometimes I feel that we are attracted to new news, right? Because, okay, there's earnings from Nvidia, there's some people are talking about the result, people talking about the share price, and then we all pay attention to it. But usually when we pay attention to things like short-term things, right? Like, why the share price drop and so on, right? And then if there's discussion, say for example, we also discussed about Nvidia stocks in Bagholder pod. That was like almost 2 years ago, right? We also chat about it and talk about what's going on. Similar to the things that I just presented just now, like talking about the growth rate, 47 billions, talking about their data center, all these things. I think these are the normal talking points, right? But I think as a long-term investor, sometimes the important things is not really the short-term things, meaning the things that we discussed, like what happened in the previous 3 months, are they able to sell to China next quarter, these kind of things. I think it's not really that important one, because if you look at these presentations that I made, right, this video, I'll put the link at the description. You'll see that we have been talking about the share price, but that was before the 10-for-1 split, right? So after the split is, when this video, when we discussed about it, it was only like $49, right? So that was 2 years ago. And in the video, right, you can recall that the data center business, right, is only 14.5 billions, and total revenues in that quarter is only 18 billions. We were still talking about, wow, it went up so much from 6 billions to 18 billion. The result was so good. At 18 billions dollars, can you expect that the revenues now go up to 47 billions in just 2 years, right? So I think when we just overly focus on just 1 or 2 quarters, right, sometimes we miss the 4 quarters, 8 quarters, 12 quarters ahead, right? So you can see that this the stuff that we mentioned, right? Let's say when talk about net incomes, it was only like 9 billion back then. Right now is already how much? 20 something, right? 26 billion that I have shown just now, right? This number 26.5 billions. So you can see, right? Just go back to like discussion that we had 2 years ago, and we were talking about all these things. We can't really see past like 4 or 8 quarters. Now it's only like I think 7 quarters from this video. Things has changed so dramatically, and if you have the patience to just look past all these concern, the short-term concern, and just stay invested, right? Like me, since this video, I think I already talk about. At the point of this video, I think compared to now in terms of number of shares of Nvidia, I haven't really add all these shares. The portfolio size just went up because the share price also went up, right? It went up. It's really because the fundamentals supported the share. So basically, that's my point here. We just fast forward 2 years, so much has changed, right? I would say that when we focus on all this discussion, it's all about the short term, including this presentation that I'm making, right? It's all about short term things. What happened this quarter? What happened next quarter? But I think as a long term investor, I think the most important thing is that you want to believe what is going to play out in the next 3, 5, 10 years, whether the TAM is here, whether the company is able to compete, whether the company is coming up with good products, whether they are the best in the sector they are in, and then whether you are able to stay patient and just stay invested and just wait along the way, right? So just wait and let it play out, right? Basically, that's my approach. That's my presentations for today. Okay, I'll just post here just to see if there's any questions on my presentations. And let's say if you have questions, I will just hang around and see and answer those questions. If not, we will end the discussion here. So let me read out the first comment here. They always miss China market. It is trust issue, national security issue, and Huawei already produced capable enough already. No needs for their rubbish H20. How I will respond to this is that I will say most people actually have no idea in terms of whether their product is good or bad. Most people because just look at those who, on one camp there's Ang Mo camp, right? There's another camp, Chinese Bull camp, right? All these people, they commented about like, H20, is it rubbish or not? How is it compared to Huawei or not? I think this is like people who commented this, right? Even including myself here, right? You can just label all these people as clueless people. We all don't know one. Why? Because we are not the people who are using these chips, these data center chips. You and I, we are not AI researchers. We don't use this chip directly. Those who use these chips, right, usually they are too busy working. They don't have time to watch all this content anyway. So I'm like 99.99% sure that you don't know about this chip. I also don't know. But how do we get a gauge whether that this kind of like H20, whether it is good or bad? You just observe by the time they are able to sell to China, right? You just observe the sales figures. If Nvidia is able to break down, that they're willing to break down the sales number, you just look at the sales number. And actually in the past, Jensen also mentioned that the size Chinese market, what's the size? I believe the number is about like 5 billions in just one quarter. They're selling 5 billion. If it is rubbish, right, then they are not able to sell 5 billions. 5 billions is not a small amount, you know. That's why I say that you can say that, oh, Huawei chip is so good and good, right? I believe, let's say Huawei chip is good, right? Then Nvidia is not able to sell to China, because for whoever that is spending like billions of dollars in data center chips, right? These kind of people, they are not like, you know, retail consumer. They are very smart people. They know what they want. They know what chip, what data center, what kind of product that fit their needs. So it's very easy. Just look at whether they are able to sell or not. So that's why I say that when you look at, people talking about, what rubbish H20, all these Chinese AI researcher or AI companies, they will just buy from Huawei. They are clueless one. So as simple as that, right? I was totally clueless. So just look at the numbers. They will come in. If it is fast, then you see in next quarter. If not, you see another 1 or 2 quarters. Once all these things is resolved, right, you will see that they are able to sell. Then we are talking about H20, which was the previous generation, and it was a chip that is like in terms of memory is already constrained. If they are able to do a version, a Blackwell version for China, right, then you see whether they are able to sell or not. So that's why I say that all these things, right, if you read too much about those Chinese boo thesis, right, or research or news, right, there's one group of people who always say that, Huawei is the good one, they are clueless one. So that's why it's usually I see these kind of things, right, this kind of commentary, I was like, okay, good luck to you if you believe all these things too much, right? Don't be misguided by this kind of people. They embed all this nationalistic view into their view when it comes to investment. So I would say that you trust this kind of things too much, right, then your investment hard to do well, right? So that's why just be careful on that. From Donkey, wallet is honest. Yes, 100% wallet is honest. Let's say even for AI researcher in China, right, even if they are nationalistic and they look at what they can get from Nvidia versus what they can get from Huawei, after factoring the cost, all those things, right, if they are able to, they look at this, they will still spend on Nvidia, because no choice, man. Wallet is honest. They are voting with their money, so I believe their vote. So that's a comment on China. Yeah, I think short presentation today. I would just say that for Nvidia, although I'm not adding, because sometimes I say that I'm concerning about whether they are able to sustain this kind of high growth for 2 or 4 years, right? Or rather, I would say that I rather wait and see. Let's say suddenly if they disappoint in terms of sales, and then suddenly the share price drop a fair bit, then I might add, right? But for now, I think the results still looks good in terms of their products. Still, I'm very confident they are able to maintain their market share. So to me, it's a hold for now. Of course, if let's say the share price continue to dip from here, I might be adding a bit more. So that's my planning when it comes to Nvidia. In terms of the questions of what else to buy in September, right? So I don't want to comment too much. Usually my standard advice is you look at your portfolio, whatever in your portfolio, just continue to add on your portfolio, right? That's the passive kind of answer, which is something that I am doing myself, right? So that's my questions on that. All right, thank you so much for tuning in here. See you in the next one. Bye bye.